As inflation has surged to multi-decade highs in recent years, investors have become increasingly concerned about preserving their wealth against eroding purchasing power. Traditionally, gold has been a trusted safe haven, seen as a reliable hedge against inflation, while Bitcoin has emerged as an intriguing alternative. But how well does Bitcoin really compare to gold in this regard? This video will explore gold and Bitcoin's roles as inflation hedges by examining their histories, effectiveness, accessibility, and demand factors. Understanding inflation hedges. An inflation hedge is an investment designed to protect against the loss of purchasing power caused by rising prices. As inflation reduces the value of currency, investors turn to assets expected to either retain or increase in value. By investing in assets with this potential, investors aim to safeguard their wealth from devaluation. For example, inflation in the U.S. reached a peak of 9.1% in June 2022, the highest since the early 1980s. In such periods, inflation hedges gain prominence, with traditional hedges like gold experiencing a boost as investors seek safety in established assets. While Bitcoin has been proposed as an alternative hedge, its ability to act as one remains under debate due to its limited history and high volatility. A historical comparison: gold versus Bitcoin. Gold's track record as a store of value and inflation hedge spans thousands of years, positioning it as a preferred choice during economic turbulence. For instance, during the 1970s stagflation, gold prices rose from around $35 per ounce in 1970 to nearly $800 per ounce by 1980, as inflation hit double digits. Gold's stability over such extended periods reflects its reliability, as highlighted by Fergus Hodgson, director of Econ Americas. He describes gold as the safest inflation hedge you can get, emphasizing its consistent value preservation. Conversely, Bitcoin is relatively new, having been created in 2009. Its limited historical data, especially during inflationary periods, raises questions about its long-term stability as a hedge. Bitcoin enthusiasts often point to its fixed supply as a potential inflation-resistant characteristic, but without a prolonged track record, its effectiveness remains speculative. Effectiveness as an inflation hedge. Gold has historically demonstrated effectiveness as an inflation hedge, rising in value during high inflation periods when traditional assets like stocks struggle. Research from the World Gold Council shows that gold has maintained or increased in value during most periods of elevated inflation. For example, gold's value surged by over 20% in 2020 during the COVID-19 pandemic, as inflation fears and economic uncertainty gripped markets. This predictable response gives gold a solid advantage. In contrast, Bitcoin has no established record of performance during prolonged inflationary spikes. Since Bitcoin's inception, it has experienced price volatility but has not yet faced a high inflation environment similar to that of the 1970s. Adam Perlecki, a senior analyst at the World Gold Council, points out that while Bitcoin's fixed supply suggests it could act as a hedge, there's effectively been no periods of high inflation during Bitcoin's existence. This absence of historical data limits confidence in Bitcoin as a tested hedge against inflation. Accessibility of gold and Bitcoin investments. Gold is widely accessible, with multiple ways to invest, from physical bullion to gold ETFs and mining stocks. The infrastructure supporting gold investments is well established, offering investors choices based on their goals. According to the World Gold Council, gold ETFs accounted for about 3,449 tons of gold in 2022, worth nearly $200 billion, providing liquidity and flexibility. Investors can choose between physically holding gold or accessing it through funds, giving a level of convenience unmatched by many other assets. Bitcoin, while increasingly accessible through crypto exchanges and ETFs, presents a learning curve for traditional investors unfamiliar with digital wallets, private keys, and secure storage. Although spot Bitcoin ETFs, approved by the U.S. Securities and Exchange Commission in 2024, have simplified Bitcoin investments, handling digital assets remains a challenge for many. Furthermore, Bitcoin's infrastructure is still maturing compared to gold, which has centuries of established trading and storage practices. Demand factors driving gold and Bitcoin. Gold's demand is rooted in its multifaceted applications. Aside from being an investment asset, gold has industrial uses in electronics, medical devices, and is a staple in jewelry markets. For instance, in 2021, the demand for gold jewelry alone reached 1,772 tons, driven largely by cultural practices in countries like India and China. Central banks also buy gold as a reserve asset, with purchases reaching 1,136 tons in 2022, the highest annual total since 1967. This diverse demand supports gold's value, providing resilience beyond investment demand alone. Bitcoin, however, relies almost entirely on investor sentiment and speculative interest, lacking tangible applications. Bitcoin's utility is mostly tied to its function as a tradable digital asset. If confidence wanes or regulatory pressures increase, Bitcoin's demand could diminish, exposing it to volatility. Robert R. Johnson, finance professor at Creighton University, explains that Bitcoin's value proposition as a medium of exchange is limited, making it a weaker hedge due to its speculative nature. Volatility and risk factors. Gold's reputation as a safe haven stems from its relative stability compared to other assets, particularly during economic downturns. For instance, gold prices rose steadily during the 2008 financial crisis, gaining 25% in 2009, as stock markets suffered substantial losses. This low volatility makes gold attractive to risk-averse investors seeking predictability and stability. Bitcoin, in contrast, is known for dramatic price swings. In 2021, Bitcoin's price rose to nearly $69,000 before crashing to around $29,000 within a few months. This volatility, driven largely by investor sentiment and regulatory news, makes Bitcoin a less stable inflation hedge. During the COVID-19 pandemic, for example, Bitcoin's price initially dropped in line with risk assets, unlike gold, which gained value. Adam Perlacki at the World Gold Council notes that Bitcoin behaves more like a momentum stock, following market trends rather than countering inflation, which makes it less reliable as a hedge. Potential for future growth. Bitcoin proponents argue that its finite supply, capped at 21 million coins, could provide a defense against fiat currency devaluation due to money printing. Chris Klein, Chief Operating Officer of Bitcoin Individual Retirement Account, suggests that Bitcoin's limited supply might make it attractive if inflation continues to erode fiat currency value. However, the rise of central bank digital currencies could potentially challenge Bitcoin's status as an alternative currency. China's digital yuan and pilot programs in other countries are steps toward introducing central bank digital currencies, which could fill Bitcoin's niche as a digital store of value. Additionally, emerging altcoins with unique functionalities may compete with Bitcoin for the role of digital gold, challenging Bitcoin's appeal. Bitcoin's potential as a long-term hedge will likely depend on its ability to withstand competition from other digital assets and adapt to evolving financial regulations. Is gold or Bitcoin the better inflation hedge? Gold's extensive history, reliable performance, and stable demand factors make it a more effective inflation hedge than Bitcoin. Gold has consistently held its value through inflationary periods and economic downturns, supported by its industrial applications and central bank holdings. For conservative investors prioritizing wealth preservation, gold offers an unmatched track record as a hedge. Bitcoin, while innovative and potentially valuable for speculative gains, lacks the stability and proven performance needed to serve as a primary inflation hedge. Its extreme volatility and dependency on investor sentiment make it a high-risk alternative with an uncertain future. As inflation remains a concern, traditional assets like gold continue to offer stability and security that digital assets have yet to prove. Bitcoin may appeal to investors willing to accept greater risks for potentially high rewards, but for those seeking dependable wealth protection, gold remains the superior choice. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up, and don't forget to subscribe to our channel for more future videos. Hit the notification bell so you never miss an update, and stay tuned for more videos to help you make informed financial decisions. Thanks for watching, and we'll see you in the next one.